Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to another new episode of Markets Tomorrow with daily quick stock market analysis, where we use the technical charts to understand what happened in the market during the day and then plan for a better trade for the upcoming day. Let's start April 3rd, Wednesday, tomorrow 2024. So we had another indecisive market that happened today, and let's try to understand what exactly happened. So it was flat consolidation day, right? It was a small dip and then the quick recovery and then range bound in the short range, and finally it managed to close absolute flat of 0.04, just 9 points down, and it's formed dodgy candles in decisiveness, and it's above today exponential moving average still. Remember, we're in the middle of a 34% of rally with a 4.5 max retracement that's happened so far. Nifty it just below the 22,500, 22,453, and intraday it was small dip and recovery in range bound move. This is what happened, as I said before. Banknifty also ended similarly with a flat consolidation, close absolute 33 points down flat. Industry dodges. The small body indices is seen the Banknifty candlestick of lady also. It's probably, you can say, it's small body spinning top, not exactly spinning up, it's slightly weighing. We'll see that in the charts, but absolute flat indices is evident in the markets, both indices, and it's not giving up much of the price points. It's just flat, and remember, Nifty is at still maintaining that 47,500. It's crucial. Remember, they've been taking a deeper cut at 8.5%, 26% of the rally overall. So the current resistance and supports of Nifty is not best. 22,000 is good support down there, and 22,165 can also be a support above that. So 20 exponential moving average coming there. And the rest just could be 22,530 is the all-time highs, and then 22,600 above that. Banknifty 47,000 and below 46,530 are good supports down, and 48,000 above, and then 48,160 previous highs can be good supports. Let's just quickly go to the charts and then try to see what can we make out from that live, and then we'll come back. That's what it is, right? Let's close this one in Japan. So two indecisive candles in the Nifty, and remember that is a resistance. So previous resistance happened on March 7th and March 11th, the same place where it has halted. So it's a possibility of a change in probability on the downside if that breakout does not happen. Market is not able to close above that 530, 22,530. Then it could be a potential change in probability downside move where the previous support could act as a resistance and could move further down. Otherwise, things looks fine. The change probability, apart from that, the high low patterns, the momentum that has gained previously price has gained all this intact more or less. It's just that it didn't move much, and it closed mainly small body indecisive. And if you look at the 15 minutes charts, you can see that intraday price action was it was just range bound. The small dip and a quick recovery on Nifty in the back, both small dip and a recovery in the price action. So things more or less remain the same, but the problem is we are at a resistance on the Nifty, and Nifty has got another 1,500 points to hit the all-time highs. Nothing too much for Banknifty, but to be careful due to the fact that it's 2 days of pause that has happened. Let's go back and see what's in favor of the bulls. So the moment the price gains that it had done from the last recovery is intact, and the moment was also not given up with the trend. Also, it's not crossed over back to the bear zones yet. So that way, price momentum and the trend remains all the same as what it had gained in the last couple of days during the recovery. So The RSI is bullish, and the higher life patterns are intact. ADX is bullish, and exponential moving average 20 price is still above that, and VIX is cooled off over 3.5%. It's at 11.65 below 12 for the first time after a long time. Nearly 23% or so of cool off has happened in the last 1 month along the VIX, so it's fallen back to the low volatility regime, which is a good thing. Well, Japan still remains the same. It's showing some signs of expanding on the upside, beginning of an expansion, you could say, which could give an anticipation of potential up moves here on both indices. And this is sector-wise. Sectoral indices, if you see, it's all green except for the IT, the pharma, and the charts, if you see, bullish momentum is maintained in almost all the sectors except for the IT and the FMC. So the IT is still in the bear zones, and us FMC and on the sideways momentum. So heavy weight stocks are also bullish on sideways momentum, either time short term, except for the INFI. So it is going to hit back badly right now. Otherwise, things looks fine. These are the factors in favor of the bulls. And if you look at the bears, the Nifty, the Banknifty is close. Indecisive is more about the bears. And there is a probability of change priority on the downside. This is also in favor of the bears. So previous resistance down, things could go wrong. Major US analysis are also the peak in the middle of a big rally, and it's consolidating there, showing some reds. There's a Fed speech outcome that's coming tomorrow evening, and you have the RBI policy one for us that's coming on Friday. So while it is waiting for something, it's indecisive as to should it consolidate more, should it retrace further, or should it break out for positive news. Marks this indecisive. So that's what US markets are giving indications. Global markets, another market, and dollar is also spiking up 105. Dollar is gaining strength, and rupee is weakening further. It's about 83.3. It's in bad shape. Crude oil is also spiking up and trying to break out at 85 on the top of the trend of the parallel trend line channel, and then any breach of that further to the 90 levels should be catastrophic. Gold is also showing that the switch to the safer haven is happening from the equity market, gives the doubt of that factor because gold is at all-time high. It's a hedging instrument. So somebody who has big money is seeing some risk in the equity market, probably. You know, think that way sometimes. So that's why it calls to in favor of the bear section. And the open interest will come. It's a short build-up, it's a long build-up. Especially it's a short build-up, and the PCR is also not absolutely above the 1. So it's kind of not bearish, not bullish either. Not bullish either enough is what we can count it for. So futures open interest and the option open interest are not that great to be called bullish. NFIs were not sellers, they were not buyers yesterday, the last data that we have. Let's quickly check if they had sold further today. On April 2nd, that is not coming. Probably they might have sold today as well, most likely. But FIS not is also probably didn't see guys to buy more or not. So that's also in favor of the bear. So you'll have to judge between this and the world. It could be that today's close was very indecisive. Market is at a resistance zone. It's waiting for some event to complete or some outcome, some news trigger that has to happen. But that's the reason why it is not dropped off the gains that it processed in the last several days, and now has given up the moment of the trend as per the indicators. And there is a possibility of a breakout again. That's possibility still there. At the same time, it is at a resistance zone, and it's indecisive. It's waiting for something. And Banknifty also is doing the same thing. It's not in contrast as it used to behave earlier. It's not contradicting with the major market index. So it's in power. It's also showing strength. It also doesn't want to give the gains. It's also closely indecisive. So all these elements are there more, and it's waiting for directional up moves, what we could see as of now from the charts. But the tight stop loss has maintained it. If you take positions on the long side, because change of margin breakdown could be possible with market sell resistance. So for investors, whenever there is a dip happening, they'll have to put aside long-term investment quality stocks in short chunks, and or they could also try for option setups and strategies that gives regular. Check out the playlist for that. As traders, the market is attempting to break out, but it's not confirmed. There is a threat of it breaking down and retracing or reversing as well. So it has a lot of space to move on the upside in the parallel trend line channel that we have seen earlier, but at the same time we have to be cautious. That's why it's kind of indecisive. You cannot take a directional view, so then you have to play the non-directional view with the base of the support and resistance levels that we have, and we'll have to manage the risk. That's all we can. So, by the way, make note that Fed speech outcome is coming tomorrow, and the reaction could come in tomorrow night. So reaction will come on expiry day on Thursday. Our policy is coming on Friday after the expiry day. So keep that things in mind, and that's what we have. We have an industry pause at very close to the all-time highs, with a couple of events that's coming in another couple of days. So some interesting hovering around. Otherwise, market is bullish. That's all. Happy trading, happy learning, happy investing. Play it safe. Bye.